Hello, everyone. Welcome to the market opening bell on Wednesday, May 28th. On Tuesday, Hong Kong stocks started weak but later rallied. The Hang Seng Index opened 65 points lower, dipped 114 points to a low of 23,167 before noon, and later surged 137 points to a high of 23,419. It closed up 99 points or 0.4% at 23,381. The A-share index rose 32 points or 0.4% to 8,469, and the Hang Seng Tech Index gained 24 points or 0.5% to 5,182. Total market turnover was 203.2 billion Hong Kong dollars. Southbound funds saw a net inflow of 11.975 billion Hong Kong dollars compared to a net outflow of 1.507 billion Hong Kong dollars the previous day. Technical analysis, the Hang Seng Index continued to see lower highs and lows, briefly approaching the 20-day moving average at 23,068, but closed below the 10-day moving average at 23,509. In Mainland China markets, the three major indexes closed lower. The Shanghai Composite Index fell 6 points or 0.2% to 3,340. The Shenzhen Component Index dropped 62 points or 0.6% to 10,029. The CSI 300 Index declined 21 points or 0.5% to 3,839. Combined turnover for Shanghai and Shenzhen was 998.9 billion yuan, down 11 billion yuan from the previous day. The renminbi central parity rate was set at 7.1876 against the US dollar, down 43 pips. Although stocks generally fell, with Geely, NIL, and BYD down 1.6% to 2.1%. Mainland media reported that automakers like BYD, Geely Galaxy, and SAIC-GM have launched price cuts and promotions, potentially sparking a new price war. This could squeeze upstream supplies profit margins to 10% and extend payment terms to 120 days, possibly leading to losses and quality issues. Xiaomi Group Q1 revenue was 111.293 billion yuan, up 47.4% year-on-year, beating expectations of 108.97 billion yuan. Net profit soared 161% to 10.924 billion yuan, surpassing forecast of 7.87 billion yuan. Adjusted net profit under non-IFRS rose 64.5% to 10.68 billion yuan. Gross margin reached a record 22.8%, up 0.5 percentage points. The smart electric vehicle and AI innovation segment generated 18.6 billion yuan in revenue, with 18.1 billion yuan from EVs, with a 23.2% gross margin but an operating loss of 500 million yuan. Kuaishou Q1 revenue grew 10.9% to 32.6 billion yuan. Adjusted net profit under non-IFRS rose 4.4% to 4.58 billion yuan. Kuaishou's app saw average daily active users reach 408 million, up 3.6%, and monthly active users hit 712 million, up 2.1%. Daily active users hit the record high, exceeding 400 million for the third consecutive quarter. Daily time spent per DAU increased 5.9% to 133.8 minutes. Kuaishou's clean AI monetization accelerated, generating over 150 million yuan. Its overseas business achieved operating profit for the first time after 2 years of a focused strategy. Link REIT announced that for the year ending March, its revenue rose 4.8% to 14.223 billion Hong Kong dollars, and net property income increased 5.5% to 10.619 billion Hong Kong dollars, driven by improved performance across most markets. Total distributable amount grew 4.6% to 7.025 billion Hong Kong dollars, supported by strong Hong Kong performance, contributions from Shanghai Qibao Link Plaza, reduced finance costs, and one-off tax adjustments, though also offset by rising costs, including non-capitalized acquisition expenses. Hong Kong retail rental reversions turned negative at -2% due to market challenges. Annual per unit distribution rose 3.7% to 2.7234 Hong Kong dollars. Final distribution was 1.3745 Hong Kong dollars per unit, up 3.7%, implying a dividend yield of about 6.7% based on yesterday's closing price of 40.9 Hong Kong dollars. Earnings today include Kingsoft Cloud, and Johnson Electric. US earnings include Nvidia, Salesforce, and HP, boosted by the EU's agreement to accelerate US trade talks and rising US consumer confidence. US stocks rebounded sharply. The Dow Jones rose 740 points to 42,343. The S&P 500 climbed 2.05% to 5,921, and the Nasdaq gained 2.5% to 19,199. The China-focused Golden Dragon Index fell 0.28%. Pinduoduo Holdings plunged 13.6% after Q1 revenue grew 10% to 95.67 billion yuan, missing expectations of 103.13 billion yuan, with net profit down 47% to 14.74 billion yuan. Pinduoduo's CFO noted that growth is expected to slow as business scales and challenges emerge. Tesla surged 6.9% after CEO Elon Musk said he's back to working around the clock, sleeping in meeting rooms, server rooms, or factories. Nvidia rose 3.2%, Apple gained over 2%, and Nike jumped 4.7%, the top Dow performer. On U.S. economic data, April durable goods orders fell 6.3%, the largest drop since January 2024, but better than the expected 7.8% decline, pressured by 10% reciprocal tariffs and weaker demand after front-loaded orders. The Conference Board's Consumer Confidence Index rose to 98 in May, up 12.3 points from 85.7 in April, ending 5 months of declines. Our stock pick today is Time Interconnect Technology, stock code 1729. Time Interconnect Technology primarily engages in the manufacturing and sale of wire components, digital cables, and server products. The sudden rise of artificial intelligence has driven the growth and development of the group's server and data center businesses in 2023. In 2024, due to server upgrades, the data center division and specialty cable division saw significant revenue increases of 53.4% and 207.8% respectively, with improved profitability. Additionally, the group has placed greater focus and effort on its medical equipment cable business, aiming to expand its medical equipment customer base and enhance its R&D capabilities. Benefiting from the completion of 2 new factories in 2023, Kunshan Time Interconnect Technology and Jiangxi Time Interconnect Technology, the production capacity and R&D capabilities for medical equipment cables have significantly expanded, leading to a 216.5% revenue surge in the medical equipment division. Driven by these segments, the overall profitability of cables and wires has improved due to enhanced profit margins. In July 2024, the group completed investments in 2 medical and healthcare-related companies. One is a Japanese company with over 30 years of solid operational history, specializing in the development, production, and sale of electronic medical devices and other medical equipment and supplies. The other is a UK-based startup with 7 years of expertise in touch and virtual reality technology. This startup has developed patented wearable haptic technology that creates sensations of weight, resistance, and assistance in virtual simulation scenarios, initially applied to spatial computing for health and fitness data. This technology has potential applications across multiple industries, combining fitness, health, and gaming to enhance human performance and neuromuscular recovery in the vast gaming market. The group believes that these investments will leverage the extensive expertise to create synergies in R&D, production capabilities, and global market expansion for medical-related products. These investments also provide an opportunity to expand the product portfolio offered to existing major clients and enter new business segments, further diversifying the group's business mix. Additionally, two new liaison offices, Time US and Time UK, were established in July and September 2024, respectively, to capture more opportunities in the medical-related market. In new business areas, considering the booming automotive and electric vehicle markets, the group believes that automotive wiring products will help provide a broader product portfolio to its clients. To this end, the group established a new wholly owned subsidiary, Links Mexico, in Mexico to increase market share outside China and Asia. The new factory will produce digital cables and automotive wiring products, aligning with the China Plus One strategy to avoid over-reliance on China, diversify operations to other countries, and direct investments toward manufacturing in other promising developing economies. This group The group believes that expanding production capacity and strengthening its business foundation will enable it to seize more market opportunities driven by next-generation networks and the automotive market. Recommendation buy at 4.9 Hong Kong dollars, target $5.4, stop loss at $4.6. I do not hold the aforementioned stock.